Okay, hello everybody. Welcome to Korean Lanta Mentorship here with another Velocity Banking review, spamming the YouTube algorithm with another review of the same thing that we talk about all the time, which is about paying off debt. And I do think that YouTube made a huge change to their algorithm recently. But it's all right. We'll just keep making more videos because that's probably the most important thing. Although maybe I should hire an SEO specialist, but it's all good. So what is velocity banking? It's a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. And so the first step to velocity banking is creating a budget, listing all of your debts, right? So income, expenses, every single debt that you have. And then this last line item here is all of your personal expenses that are not tied to debt: food, gas, insurance, blah, 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 blah. And we're going to be really conservative here. So normally I say, hey, your budget is $2,000 a month for those non debt expenses. But I actually did review someone else's budget where it was about 1600 a month. So we'll say 1750. And then what we're also going to do is we're not going to save money, right? So when we do velocity banking, we're controlling the flow of our money into one place called a line of credit, and whenever we get paid, we have it in our checking account. Actually, we don't have it in our checking account. One more time, I just woke up. We have the money come into our checking account, and then as soon as it goes out, comes in, it just goes out into something called a line of credit or into debt. Okay. So, what is a line of credit? Well, basically, it's a financial tool where you could borrow money, pay it back, and then use it over and over again. So, this is my home equity line of credit, $373,500 home equity line of credit. And then, if we take a look at all these lines of credit that I have here, all of them. And this is like my latest credit limit increase, which is a business credit card that I originally had for $10,000. And then I just woke up and then the bank increased it to 17,500, right? Didn't even need a hard pull. And then we scroll down and we see that I am the top 0.01% in terms of lines of credit limits, right? 739,000. And by the way, if you don't know who I am and this is your first time in the channel, this is just another opportunity for me to flex. I paid off a mortgage in 2 years and 9 months. So yeah, just another opportunity for me to flex. I'm actually looking at my financial biceps. They look kind of big right now. Although I can't say the same for my real biceps. But yes, I do have over $739,000 in lines of credit, which includes credit cards, personal lines, business credit cards, home equity lines. And I'm going to tell you the secret to all of this, right? The secret to all of it is that banks don't lend money to people who need it, right? And that's there's kind of a fundamental misunderstanding about who a bank even lends to or who the people with all the debt are. Um, Banks would, like, for example, 90% of the population doesn't even qualify for a mortgage, right? So there's a unlikely possibility that you would qualify for a mortgage if you're low income, right? Unless it was like 2008 or 7 when they were kind of giving anybody with a pulse a mortgage, and I think they just made it up, their income. At least their income had to qualify, but they made it up. Don't make up stuff. You could probably go to jail, right? So yeah, so banks don't lend money to people who need it. And then there was once upon a time where you didn't have debt, and then you got a debt offer in the mail, or probably, or maybe you went to the bank's website, and then what happened was like, ooh, look at this, 0% offer for 12 months. Oh, ooh, low payments over time. And so the trick is that they want to give you as much balance as possible with as little as payment over time, and that's how they make their money, right? But they don't lend money to people who need it. And then eventually you become if you take on too many of these debt offers, you become a person who needs money, and then the bank will never give you a line of credit at that point. Almost never, right? All right, so let's go ahead and take a look at this. So this is 7.5%. This is a credit limit of, I don't know, we'll say 150,000. So I know what some of you are thinking. 150,000. Who would give you $150,000 credit limit, right? And you're talking to a person who thinks a $300,000 line of credit is kind of small, right? Actually, your perspective kind of gets skewed in many ways because I remember when I first tried to like get credit and I was like really afraid, like, whoa, a $2,000 credit card. That is amazing, right? And then you get the 30,000 and the 50,000 and then 150 and then 300, then that 3,000 or $2,000 credit card almost seems like an insult when you get it, right? So that's how it works, folks. So let's go ahead and do all this. And what we're going to do is we're going to pay off some debt and then increase our cash flow and then put our paycheck into line, take our expenses out. And how do we increase this cash flow even though it looks the same as our savings account? Well, we just move some debt into the line of credit and then we put our entire paycheck in. And so what we're going to do is use a formula called the cash flow index, and all it is basically the balance, 5,000 divided by the payment, and then it gives us a ranking system to pay it off. And the lower the number, that's the one you want to pay off because you get more bang for your buck for paying it off. I mean, let's say I pay off 200,000. How much do I get? I get this itty bitty 843. Whereas if I paid this 30,000, I get 1050. See how that works? So let's go ahead and do this 5, 15, 27, 30. I'm going to sum it up. And then I am going to do this, which is a 77,000, 77,000. And then what we're going to do is this 0000, right? And all of these credit card payments go to 0. And look at that. You see that? Same income. And then same savings. And look at that cash flow. Ooh. Now in this side, the savings went to 0 and the cash flow went to almost $3,000. Let me dramatically zoom in for you all. $3,000. Wow, that is amazing. Okay. All right. So now what we're gonna do is with this debt, we're gonna put our entire paycheck in, entire 6,000 in, take out the 3,000 on our expenses, and then the debt will go down about 3,000. So let's go ahead and do that. So all right. So I'm going to do this, and then I'm going to do this, H2 minus, okay, 2988.38, okay, and then what we're going to do is take the interest, I do this here, multiply by the average daily balance, 0.075, divide by 12, and this should be relatively easy, right? I just need to copy and paste these formulas, bam, 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 bam. And then bam, bam, bam. And then you see that in 29 months, it's all paid off. Okay. Oh, what am I doing this? I need to get rid of this. This is from something else. Okay. So, yeah, 29 months. So that's less than 3 years. Not bad. And then that is how much debt? 77K. 77K. And then we have these two loans, which is the auto loan and the mortgage. And then now what we're going to do is just do 29. That's the current month. You see that? And that's the current balance, auto loan and the mortgage. Again, lowest cash flow index. We move this here, and then we get extra $400 in our cash flow. Extra $400 in our cash flow. So let's do that. And then we're going to move the current balance there. Oopsie. Plus 12384.36. And then this is going to be, what's our cash flow now? It's $3,000. Minus 3406.79. And then, all right, bam, bam. So 2 more months. Okay, that was easy. See, the auto loans are kind of like probably the most predatory, but I find them to be the most easiest to pay off, Just pay off your credit cards first usually, and then it's the auto loan. Regardless of the interest rate. So, okay, so that is how many months? It is 32 months. 32 months, and then this is going to be 77 plus 23, and then this is going to be 100K, and then this is going to be 200,000. So 32 months, 200,000, so 32, and then oh, did something happen here? Why did this not update, or did it screw up? Let me see. All right, let's see what we get here. Okay, so 32. All right, there we go. It's updating now. Excel froze on me. So this is now 188. Now, you can make an argument that we don't need to pay off our mortgage, right? But at the same time, it would be nice because if we, even at a 3% rate, right, we have a very low payment of $843. If we go to the entire term, then we pay $100,000 of interest, right? So if we have $100,000 of interest, then that's a no bueno. That's a no-no. Okay. Like, I don't know. Something, I guess it always bothers me that people are okay with like paying 50% interest on their home. You know what I mean? And then with other things, it's like they argue about a $1 or $2 discount when they're like it's like they don't, how to explain this? They don't really care about like, okay, you ever notice that if you try to pull the same shenanigans to one of your friends, which is like, hey, let me borrow $20, and I say, okay, I'll let you borrow $20, but then you gotta be $10 in interest. They'll be like outraged, right? It's like $10, but then like when they buy a home for a $200,000 home at 3% interest rate, they're okay with $100,000 paying interest to the bank, and they'll probably pay more because they're gonna probably refinance along the way. You know what I mean? So, anyways, all right, so let's go ahead and talk about this. So, there's really two ways to pay this off. Number one is you do direct extra payments. That's a default, right? And then number two is with the line of credit. So, I don't ever like get into those arguments about like what's better, the line of credit or direct payments. It's like just do whatever you want, but you can make an argument that you could at least in the beginning, make some payments with the line of credit or even a credit card. And you might say, why is that? Is because number one, we don't want to segregate our income, right? So income segregation is actually how we got here, right? And so if you ever take a look at that live stream that I did exclusively for YouTube channel members where there's like 22 debts, that's the prime example of YouTube segregate. I'm not YouTube segregation, income segregation with $4 left over in savings. Right. So if you make it easy on yourself and just dump your entire paycheck into the line, take your expenses out, and even do it with the mortgage, that prevents income segregation. Number two, okay. Number two is that you may have your credit limit increase if you're doing it with the credit card. So a lot of times people say, "Well, why would I use a 30% credit card on a 3% mortgage?" Well, if you want random credit limit increases because you're actually using your card, and a lot of people don't understand this, is that usually to qualify for those increases, you have to use your card, right? Like, the bank doesn't want to give you a $20,000 credit card, and then you're like, oh, I'm never using it because the credit card is risky, right? Like, they don't want to see that. Like, you want to know how I got this $17,500 business credit card increase from 10,000? I just used it and then I paid it off, right? So if you do like $10,000 swipes to a mortgage, right, with like Plastique or whatever, then you might get bigger credit limits. It might be like 25 or 30 eventually, right? So might be able to do that, and if not, no worries. All right. So let's go ahead. So what I'm just going to show you here is that yes, you can even use a 8%, 10%, 30% line of credit to pay it off, or just directly pay money into it with extra payments. Not a big deal. The most important thing is that you just you actually pay the sucker off last because it takes up the least amount of cash flow. All right, so 188,580.93, 188,580.93 is 7.5. What's the income? It's 6,000, so 6,000, and I think what's the living expenses? It's 1,750, so 1,750, and then now let's do a $6,000 chunk, right? So you see it gets paid off in 4 years. Now, if we decide to go a little bit crazy and use a 30% credit card, whoa, 4.1 years and 16 grand. And by the way, if you don't know where I got this calculator from, it's from Renatus. I'm actually a reseller of the education independent contracted marketer. That's where I learned a lot of this stuff from. If you're interested, click the Google form link below. I may possibly ask you to join a cult. Okay, so 'cause see 30% here. And no, yeah, if you email me saying, "Can you give this away?" I'll just say no. Pass it, pay me. People who pay attention. Okay, so 7.5%, and then this is gonna be 4 years, and then this is gonna be 12 grand. Okay, and then this is gonna be blah 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 blah. All right, so and why am I saying blah 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 blah? Is because I just don't have to care anymore because I paid off a mortgage in 2 years and 9 months. See how that works? What do I have to make these videos for? And as you can see, it actually takes a lot of discipline and effort to make these videos, at least for me, because it's like me teaching how to get some drinkable water when you have drinkable water everywhere. You know what I mean? I know some of you are in that Sahara Desert where water is scarce. So you're probably paying attention really well. Okay, so 4 years paid off. If I use a 30% credit card, right? That's 16 grand. Now, if I move this into a 30% credit card, it never gets paid off. And if I use a 7.5% line of credit, it does get paid off in 4.4 years. Now, you see how if you move the entire loan into a line of credit, it's interest rate sensitive, whereas if you just kind of do small chunks, it's actually not, right? It's crazy. Whoopsie, how it's actually not. So 4 years, and then I'm just gonna go here, which is 32 months, and 77 plus 23, which is 100K, and then this is gonna be 4 months, so it's gonna be 32 plus 4, no, 4 years. So 32 divided by 12 plus 4, which is 6.67 years. And then we're debt free. Okay, debt free. And then there's gonna be 0. And then yeah. Okay, well, that's it for today, folks. This is Crane Lanta Mentorship. Just another video spamming the YouTube algorithm, right? Spamming the YouTube algorithm and paying off debt. That's what we're gonna do. Make a bunch of videos to clog up the internets. Okay, well, that's it for today, folks. Have a great day, and might do another live stream today. I don't know if I might create a live stream for non YouTube channel members. So what would I do in those live streams? It would just be not answering your specific questions, but basically possibly answering generic questions so I can just make more money. And I clearly admit that unlike other people, I don't have the purest intentions, and I'm possibly a cult leader. And yes, I may possibly be trying to scam you and make money off of you. And the reason I say that is because, people accuse me of these things, kind of like when they accuse me, I don't know what I'm talking about, when I have credit and I have over $739,000 lines of credit. I'll just like, yeah, dude, you're right. You are absolutely right. Okay. All right. Have a great day, everybody. And I'll see you all on the next video.